Greetings. Today's focus is on the fact that Bob Lutz has something called the 95% rule, and this relates to Tesla's stock price decline recently when it comes to the announcement on the number of cars sold in Europe. We also have a discussion of Pinafarina and its partnership with Tesla. And then finally, we have a conversation about what's going on with Fiat getting into a pool with Tesla and the impact that'll have on Tesla's earnings short and long term. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time on our channel, please take time to like and subscribe. If you're a repeat visitor, welcome back. Wanted to note we're once again at a place called National Harbor in Washington, D.C., and it's a really nice location that encompasses a number of attractions that are sort of worthwhile to check out if you're in the area. Wanted to also thank our subscribers. I wanted to note that within the next week we will start offering subscriber-only content. So if you have not subscribed thus far, I'd encourage you to do so, because we have some really impressive programming coming forward, and you have to be subscribed or a Patreon supporter to get access. Also wanted to note, thank you to all of our Patreon supporters. We definitely appreciate that support. It enables us to make changes. For example, I have my dead cat mic here. We're actually working on switching to a 4K camera, and that's at about $1,000 payment, and therefore we're trying to get all the funds together to make sure we continue to improve so we can do a better job for our show. This is Greg for Teslafaninsight. So, as I was reviewing what's been going on with Tesla over the last couple of weeks, I reviewed some footage of Bob Lutz, and what Bob indicated is that 95% of buyers currently want a combustion engine vehicle. And this was an interesting comment by him that I read. I've heard it numerous times, but it hit a little bit differently over the last couple of weeks as we've seen the sales of Tesla in Europe and China, and how that's affected, we haven't seen the earnings number from it yet, but we've seen the numbers, and the numbers suggested that there were some challenges that Tesla was having in terms of demand. This show, the first segment of it is we wanted to kind of review this dialogue about demand and whether or not Tesla stock and the company's kind of in trouble relative to this demand. The one key point that I've shared previously that I think is important for us to note here is that there's been a suggestion that the amount of demand for Tesla's cars has been declining, and therefore Tesla's stock price should be lower because of this declining demand. What I want to highlight is that there's some interesting numbers that everyone knows, which I think does a counter argument to this. What that number is that it turns out that in the United States, approximately 100,000 vehicles sold last year in terms of Model 3s. And what happened is that the average price of sales of those vehicles was actually $57,000. So as we all know, the long range and the performance edition of the car up in the $70,000 to $80,000 US range, and then there's a $50,000 300-mile range vehicle, I believe the dual motor, and then we haven't seen the lower price vehicles hitting the streets yet, but they have been announced. So what this turned out in terms of numbers that we were looking at is the fact that there are more people buying the cheaper car. So if the average price is $57,000 in terms of what people purchased, and the average price of Teslas is about $65K over the last year, it's clear that there's a weighting of purchases towards the lower priced vehicle. So why this is hugely important is that Elon and Tesla decided to enter both China and Europe with the most expensive versions of the Model 3. The result was, yes, you did enjoy certain sales, and that was awesome. But the problem that you ran into is that, and something that I thought was interesting from the start, was it's great that you're delivering Model 3s to Europe and China. The challenge, though, is if you're not offering the lower price options, folks, you're still targeting a market segment of folks who are actually at the high end and could almost as easily have bought a low-end Model S rather than a high-end Model 3. So Per and others, please note that I'll definitely say hello to you guys at the end of the show, but most of our viewers have asked us not to make comments during the show so that we can complete the show and then say hello at the end. And I appreciate the comments you shared regarding new sales in Denmark. So what's interesting about this whole situation and why I bring it up is that both Europe and China have not seen the $50,000 Tesla. They've also not seen the $35,000 Tesla. So until those two versions of the Model 3 are introduced, it's hard to say what the real demand, good or bad, might be, because it's our suggestion that there are at least double the number of people that want a $35,000 vehicle versus the 50 or 70K vehicle. They may want the more expensive vehicles, but they may not have the budget to meet those higher prices. So what the overall argument here is basically that, yes, there seems to be a decline in demand for Tesla, but the reality is there are people coming off lease and other things that are now heading in to purchase the vehicle. But the other issue is that the lower price versions that we believe will draw the biggest amount of buyers have really not been introduced in other markets other than the United States. And we believe that's going to see some really nice numbers. So I think this is kind of a little bit of a rope-a-dope, because Bob Lutz and GM were suggesting, hey, there's only so many people that want to buy an electric vehicle, and 95% of those people want to still be buying internal combustion engines. But the reality is that the actual percentage of the population that's interested in electric is kind of unknown. So because they're not being currently purchased, you could argue that there is indeed an advantage for the ICE engine in terms of how many people want to buy it. But we are soon to find out, once Tesla starts delivering the 35K version, how much market share they take is going to tell a way different story than we've been able to see thus far, because all the vehicles introduced have been at higher prices. It's also the case that I want to call it functional vehicles, vehicles that are long enough in range for people to want to buy them. That's in 200 to 300 miles of range. Most of those vehicles are going at a price point in the 70s. So for example, the e-tron is a $75,000 car. The I-Pace from Jaguar is a $75,000 car. So as these vehicles are being introduced, they're at price points that don't allow the larger population to be able to purchase them, hence why demand might be lower than expected for all electrics. So all this said, what I want to suggest then is that as Tesla brings in those lower priced cars to more markets, we're going to see new demand we're currently not seeing, because the difference between purchasing a 35K vehicle and a $70,000 or $80,000 vehicle is huge, and the usable population is 5 or 10 times the size, hence why we're expecting these numbers to be terrific for Tesla going forward as they do introductions. The one fly in the ointment of those lower price introductions is we've talked about the fact that Tesla's debt hangover from a number of things, including factory builds, etc., might be in the range of $1,000 to $2,000 a car. So as we get down to the cheapest Model 3s, there's a question mark of whether or not the gross margin that's achieved on the lowest price Model 3s is going to be high enough to both allow for the car to be paid for and the debt load Tesla has to be paid for as well. And I think this might be affecting how rapidly the rollout is happening for the lowest price Model 3. The other thing is that I really think that there's demand, and there should be more sales or more introduction of the 50K model with 300 miles of range, because I think there are a lot of people that are interested in $50,000 of spending to get more battery range and then move from there. The next thing that kind of popped up that I thought was fascinating relative to the Bob Lutz discussions of how many cars are being introduced by the huge manufacturers and how that might destroy Tesla is the fact that if you think about it, it was just announced in the United States that the e-tron has 200 miles of range. And it's great that it has EPA rated 200 miles of range, but because it doesn't supercharge, it's possible that the 220 mile of range that's achieved by the cheapest Model 3 ends up being sort of a better vehicle for folks to want to purchase. And so I'm fascinated by this circumstance, because if you ask a customer, do you want an SUV that gets 200 miles of range, and do you want to pay $75,000 to $80,000 for it, A, or B, do you want to pay $235,000 for a 220 mile range Tesla? I really think that, you know, the SUV is at a disadvantage despite better functionality in terms of room inside, and, you know, look and number of passengers I think would be about the same, but really just carrying capacity and clearance. So I think it's a really interesting challenge to watch as folks come forward. The second element of the competitive threat that Tesla or others represent to Tesla is highlighted by the fact that the Taycan from VW Audi is coming out. It's on the same platform as the e-tron, except for obviously in a sports car format. It was announced that, you know, the folks at Porsche Audi were ready to compete with the sports car against Tesla. And there's one little problem that pops up with that analysis, and that is that the Taycan is turning in 3.5 seconds 0 to 60 times. And it turns out that, as you know, the top of the line Model S is turning in 2.3 seconds 0 to 6 times, and the top of the line performance Model S or Model 3 with performance tires is coming in at about 3.2 seconds on the 0 to 60. So I just think it's mind-blowing to see a performance-oriented company like the folks at Porsche Audi still be getting blown away by even the cheaper lines of cars. The other thing to note is we haven't seen anything to suggest that the e-tron is actually able to do supercharging. So therefore, if you travel in that car, you have to stay overnight in order to get, you know, 3 to 6 to 8 hours worth of charging time for batteries, and you have a shorter range, whereas you can use a supercharger with Tesla as you travel around Europe or China or here. And so it's a fascinating circumstance to see sort of what's happening in that regard. So bottom line is that you know, Bob Lutz has repeatedly spoken of the large amount of competition entering the space, and it's amazing to me because even in the lowest line 35K model of the Model 3, you can move around Europe comfortably, moving between superchargers, and therefore you don't have range anxiety and other challenges that other SUVs or other EVs might have. And therefore I think that's why sales are going to be that's going to be flowing out there. I quickly saw a comment from Roger saying, what's the battery size and range going to be? At this point, we've seen the specs for performance. The suggestion is they're going to have high-speed charging capabilities, which we haven't seen yet. We don't know the size of the battery or how far it will go, but because it's being built on the same platform as the e-tron, one would expect that the 200 mile of range is kind of what we're going to see from that Taycan. So I wanted to sort of move through all of this because, you know, Lutz has been really hyper-focused on the fact that Tesla is about to get blown away by the large number of products being introduced by competing large firms, and that dealer network advantage combined with the number of vehicles being delivered by GM, VW, Porsche, Audi, Mercedes, etc., would in essence destroy, one way or the other, these huge well-funded companies would really put competitive products out there that would make you know, their cars more efficient. We'll jump into the self-driving at the end of today, Alejandro. Thanks for the comment. So I just thought this was fascinating. I just want to confirm that Yes, in fact, Bob Lutz is right that 95% of the population currently wants an ICE engine, and the reason they want it is there isn't an affordable electric vehicle for them to purchase, and we'll see how this 95% rule plays out as we move into this different realm. The second thing I wanted to quickly look at today is that there's a firm called Pinafarina, which is an Italian-based design house for cars. The issue that's popping up is that I had the strangest encounter about 3 weeks ago. I was driving on a US freeway between Washington, D.C. and Baltimore, and I was really stunned to see that there was actually a funny situation happening, which is I looked in my rearview mirror and I saw the headlamps of what I thought was a Model 3, and I was thinking, oh, it's just another Model 3 going by me in sort of a rainy, foggy haze. And as the vehicle went by me to my left at high speed, I caught a glimpse of the nameplate. It was actually a Ferrari. So Tesla has never admitted that they never admitted who the designer of their cars was, but I think that there's this interesting phenomenon, which is with Pinafarina as a partner, you can really see why the design of all of Tesla's vehicles have been solid and also set up for having longevity and functionality that represents sort of the highest of the art. So I say I applaud. If you want to see what a Model 3 was going to look like beforehand, look at the front of some of the, particularly there's a station wagon looking Ferrari that I think represents an example of kind of what we're talking about, and it might be interesting for you to check it out as another example. The next thing I wanted to get into today is there's big news that just came out, which is that Fiat Chrysler has gotten in partnership with Tesla in a pooling process. So why this is important is that what's been pushing Tesla over the profitability line has been what are called EV credits. So basically, in the United States, I knew about it. I didn't realize how big this was in Europe. But in essence, for large companies that don't have electric vehicles to provide an overall fleet at a certain level of reduction of emissions, those entities are now able to buy EV credits from entities like Tesla that have abundant numbers of credits, and then use those credits as a way to, in essence, pay for their right to pollute. So there was no number put on this, but in Europe/Italy, Fiat is a huge company that sells a lot of products, and they need the EV sales Tesla's enjoying to accomplish this. So as the growth of EV sales happens, definitely in Europe and possibly in China, we could see new revenue coming into Tesla from entities that don't have a large enough sales of their own EVs. They're now providing cash to Tesla that allows them to both fuel operations and continue to grow. So because of this, and because of this deal going down on February 25th, it's my expectation that as we see the quarter's numbers that go with the sales, I think we might actually see earnings higher than expected, driven by the fees that are coming in from entities like Fiat Chrysler and others. So I do think this is kind of big news because I believe in the November quarter for Tesla, the contribution was like $300 million, which was the difference between a profit and loss at that period for Tesla. And so I'm kind of expecting a number to come out based on US and European contributions of this sort. And who knows, it may not get Tesla over to a profitable quarter, but it may get them close. And I think the closer they get, that's going to positively impact the stock. Yeah, excellent question about Roger about stop using EV credits once profitable. I think if there's money to be had there, it's in their best interest to pull in as much of that cash as they can in order to fuel everything they're doing, including paying down debt. So, one of the core ideas of this show that I wanted to present is that, in essence, Tesla right now is being framed in a negative light because there's declining demand. the argument we're making is that as Tesla moves down in price point for their vehicles, there's actually a hugely increasing demand, and I believe that demand will push Tesla nicely when it comes to the demand side of the house. The challenge, though, is will those vehicles be profitable enough to not end up being sort of a drag on the company? One of the famous lines that comes to mind is from this former CEO Mascioni of Fiat Chrysler, when he said, look, I lose $15,000 per car when it comes to EV Fiats. So on one hand, I kind of want you to buy the car, but on the other hand, please don't buy the car because of how much money we lose on all of them, but we have to have them in our fleet as part of our agreement with regulators. So I think the whole thing is a kind of a fascinating situation. Also want to direct you guys to take a look on numerous services right now are listing out the fact that a Model 3 Performance was turning a 3.2 second quarter mile, and that exceeded what a couple of Ferraris were doing that were in the $250,000 range. So I think it's an interesting piece to note, the continued performance edge that Tesla / the Model 3 enjoys. And Ferraris are busy trying to handle the Model 3 when in fact the Model S is so much superior performer, etc. So I thought it was sort of an interesting footnote to the whole thing. There are several comments that have been shared regarding self-driving. We all know that this is on the horizon and coming in right now. Tesla's working hard on it, and others are as well. And I believe in the future, give it 5 to 10 years, it'll be fairly common. One of the suggestions that was made that I've seen is that there's going to be a need to have the roadways redone with sensors that can allow the vehicles to stay where they're supposed to be versus crashing, etc. And so I think there's a number of changes that need to occur for this to happen. I want to maybe dedicate the last portion of the show today to our initial conversations on what's going on with Nikola. It's been announced that Nikola Motors is 1 week away from the introduction of their cars. And I have to say that we're going to probably do a couple of shows that blend in a Nikola conversation. But I have to admit that I'm amazed because they're going to be delivering vehicles that have been in development for 1 to 2 years. And they're competing against Toyota and Tesla and Daimler-Benz and other companies. The bottom line is that it's our belief that Nikola is a fraud. And the reason is because they initially presented a vehicle a year and a half ago that looked really good. They are partnered with excellent company like Robert Bosch, etc. But as we've gone through, we haven't seen anything in terms of finished products that they are ready to ship to market. And frankly, it's nice that you can introduce something and show some great pictures, but in order for customers to be able to deliver products reliably in them, they have to be put on the road and tested aggressively before they can be sold. And we're just not seeing that yet, nor have they finished their factory. So we don't mind Nikola getting into the marketplace and doing well. It'd also be nice to see them actually deliver something rather than have huge, excellent marketing, huge, excellent discussion of what they're going to do, but not a lot of outcomes where customers can start delivering products in their vehicles. And I think they need to build a factory before they can actually move on to that element of getting things done. Now, I've seen a lot of comments rolling by. I commented a few of them. Thanks for joining us from England, Roger. I know you're a dedicated commenter on our show, and we enjoy hearing from you. Per, thanks for your comments as well. Alejandro, I have to admit I didn't see all of your comments. It'd be appreciated if you maybe roll them into the end of the show so we can have back and forth commentary in that space, and not just people who saw the live feed could get access to them. Donovan, thanks also for the hello, and hope you found our dialogue useful. In general, I'd say Tesla's in good shape right now with the Model 3 just about to deliver the cheaper versions, and I think that it bodes well for the company and the stock. We're 30 days away right now from the finish of the Chinese factory, and then they're going to start equipping it, and I think it might take a month, maybe 2, to put all the equipment needed to start actually producing Model 3s. on Chinese soil, in particular building body panels, etc. So the percentage of the car that's built in China could be increasing. So we're rolling towards the end of our show today. As usual, we're going to include some health tips. I want to remind you to do your 20 leg lifts per leg with a 5-pound weight. Also, don't go to bed within 2 hours of eating, preferably 4 hours so the foods can digest. And fried foods no more than once a week. We're going to take you out with kind of a view of what's going on at the harbor here. It's, as you can see, I'm going to finish out here with the flags blowing hard behind me. Excellent question. There's a question that's been posed regarding when do I think Tesla will become profitable from solar. The response I have to that is that Solar City is shrinking right now, and Tesla has built a plant, but the question mark is, can they beat, are they able to get better cost on the product being delivered? And we haven't seen that yet, hence why the prices keep falling. So the price of the stock and the size of market share that Solar City has keeps falling. So I hope it becomes profitable because that would help the whole company do better, but I would not be surprised if we're a couple of years away from the solar component of Tesla actually, really out there making some money. Yeah, good point. The Gigafactory should be full solar by the end of the year. Excellent point. The one problem with your analysis there about the Gigafactory being full solar by the end of the year is that Tesla changed directions as far as the Gigafactory goes. Number one, they're going to have Model Ys built there, so there's going to be an addition to the Gigafactory to do that. And number two, they're, if you will, planning to double the capacity of the Gigafactory in order to service building all the batteries in one location rather than having them built in China and the US. So these two things will result in, I think, more of a delay. So, at any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss, German, au revoir, French, ni hao ma, Chinese, lehitraot, Hebrew, Hoda Hafez, Farsi, adios, Spanish, nuf respect wa goodman is how we say it in Jamaica. And we're at the National Harbor right now. I'm going to go ahead and take you guys out with kind of a 360 view of the area. Thanks once again for joining us, and we look forward to our next conversation. Have a great day.